So under these public finance and taxation, we have these topics, which at the end of this semester, to cover these topics. There are quite a lot. So we have introduction to public finance. That is the topics. We have introduction to public finance. And then number 2, we have that is a relationship between the national government and the county government. So you have relationship between a national and county government in terms of what? Budget. So basically about the budget. And then number 3, we have the function in public finance management. Function in public finance management. Number 4, we have the procurement in public entities. Procurement in public entities. Number 5, we have public debt management. Public debt management. Number 6. No, this is but it's the same. We have another one called public-private partnership arrangement. Public-private partnership arrangement in Prerecorded. So these are the theory units, which are topics. All of these are the theory. Topic 1 to topic 6. Yes. So all of these are the theory, which are in public finance theory. There are quite a number of percentage, around 30%. So from there now we come to the introduction to taxation, which is topic 7. Introduction to taxation. And then number 8 is taxation of income. Taxation of income. So in that taxation of income, we have for the business and also for the individuals. And the number 9 is the investment allowance or the deduction. Number 9 is the investment allowance stroke deduction. Stroke deduction. And then number 10 is administration of tax. Administration of tax. Number 11. Number 11. Number 11 to talk of right administration of VAT. This is number 11, administration of VAT. And number 12, custom duty and excise duty. Custom and excise duties. And the last one is miscellaneous fees and levies. Number 13, miscellaneous fees and levies. Miscellaneous fee and levies. So you have to cover all these topic. You have to cover all this topic. So make sure to list them because it is your guideline. So we can start. So topic 1 to topic 6. Topic 1 to topic 6, I will give you some of the handouts, and but we will discuss. So I will give the handout because you cannot be able to write all the theories until we finish. So I will give you the handout for that topic 1 to topic 6, and then we will discuss also as we look at the past papers. So I want to start from topic 7, introduction to taxation. Yes. So let's start from the introduction to taxation. So in the introduction to taxation, you need to know the definition. When you say what is a taxation, what is a taxation? So taxation is a process of, when you say is a process of contributing certain income or your cash from the incomes you are earning to the government for them to do what? To service their expenditure. Remember, for the government, they always spend. The government, they spent on the infrastructure, they spent on the maybe the food programs, the health program, the sport program. So which means we have to fund the government through the incomes, and the process of funding the government through the income is through taxation. 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 So you can write definition and say tax is a compulsory contribution. Tax is a compulsory contribution. Is a compulsory contribution to the government. To the government by the citizens. By the citizen. By the citizen, that is used to pay, that is used to pay, that is used to pay for the expenses incurred, for the expenses incurred, for the expenses incurred, for the common interest, or the for the common interest, for the common interest. So it's a compulsory contribution for every earner. If you earn an income, you must contribute certain percentage to the government so that they can fund their expenditure, so that they can fund their expenditure. And then we have to know the characteristics of this tax. So write the characteristics or the features. Characteristic of tax or taxes in plural. So one of the characteristics is, we have it here. You say number 1, you say it is a compulsory. It is a compulsory contribution. It is a compulsory contribution. So that is the one of the characteristics or the features. It is a compulsory contribution. Number 2, Say it is levied or taxed. It is levied where there is an income. It is levied where there is an income. So without an income, we cannot tax. Without an income, we cannot tax. So another one, you say it is used to govern. Number 3, say it is used to govern. It is used to govern a people within certain. It is used to govern people within certain jurisdiction. It is used to govern people within certain jurisdiction. It is used to govern the people within certain jurisdictions. Like most of the time, if the government, they don't want the illegal activities, what do? They introduce the high rate of tax. They introduce the high rate of tax so that they can govern their behavior. They can govern their behavior. A good example is sport betting. A good example is sport betting. The government introduced more or the high rate of the sport betting, either the withholding tax and also the tax for the winner. So in some cases, the government is introducing this tax so that they can restrict you from doing another business. So from there, having written these characteristics, we need to know the types of taxation. The types of taxation or the classification of taxes or the classification. Umeandika hizi zote? Okay, so write the classification of tax. Classification of taxes. Classification of taxes. So taxes has been classified according to the category of number 1 is according to the administration and the collection arrangement. Another one is according to their tax rates and also according to their tax base. So you can say taxes are classified based on number 1, tax administration. And collection arrangement. A good example of this tax administration and collection arrangement is how do the government collect the tax on pay as you earn? So it is direct from the source. It is direct from the source. So that's why we classify pay as a direct tax. Number 2, we have the basis of classification is through the tax rate. And number 3 is the tax base. So we can't have those types of tax. So we have 2 types of tax. The first one is direct tax. So what are these direct tax? What are these direct tax? So the direct tax is the tax that require the taxpayer to remit his tax to the tax authority directly. So you can define that and say, this is a tax. This is a tax that requires a taxpayer to remit his tax to remit his tax to the tax authority directly So it is required. This one we normally call it tax at the source. So we have examples. Can write examples. So kindly write this note vizuri. Maybe after next semester there's a kuomba hizi notes. So examples. Yes.
Okay.
Examples. Example number 1, we have pay. Number 2, withholding tax. So you find that this one, if you are an employee, you will not receive that amount. The employer has a responsibility from deducting that amount from your pay slip without you having that amount, and they will remit direct to the revenue authority. So we have said one of the example is pay corporate tax, not corporate tax. The corporate tax will not fall under that. And then we have the indirect tax. Number 2, that was number 1. And then number 2 is the indirect tax. So this one is not, we are not remitting it at the source, but you have the individuals or the individual or the taxpayer remit after they have get their payment. So we have example is like the custom duty. So we have here examples of this.
Are we defining?
Yes.
Should we define it, Ama? We go direct.
Yes, you can define it. You can say these are tax that requires a taxpayer to remit his tax to the tax authority after the transaction and through self-assessment So once a taxpayer has made any sales or a transaction, at the end of every period, he has to do his self-assessment, and then thereafter, he has to pay the revenue, the Kenya Revenue Authority. So a good example here, examples, we have the value added tax, the VAT, have the customs duty, we have the excise duty, also the corporate tax, the corporate tax. So after the definition and then to the classification to our syllabus need us to look at what is called tax shifting and the factors that determine the tax shifting. Kama niko too fast, too slow, unaisema si tukingoja class ishe ndio unasema you are too fast. Yes?
Well, we are okay right now. I think ni conversant of
So we need to know what is tax shifting. Tax shifting. So if you read carefully the introduction of this taxation, it was introduced in most of the time it is US, and the reason why they introduced this taxation, it is they wanted to do what is called the equalization of the incomes. So they were taking the incomes from the rich people, and then they tax that amount so that they can make it so that they can be equal to the low earners income. So that's the reason why we call it the tax shifting. The tax shifting. You are shifting the tax from the low earners income to the highest earners income. A good example is what is the minimum tax rate of a payee in Kenya? The minimum tax amount?
24.
Yes.
Ah,
Yes, 24. So you see, if you are earning between 0 and 23,000, you will not fit in a tax bracket. Even though you are fitting into the first tax bracket that is 10%, but at the end of it, you are going to, we have a relief which is offsetting that amount. So for the low earners income, they don't pay the tax. For the low earners income, they don't pay the tax. But for the people who earn a lot, they pay a lot of tax. Yes, they pay a lot of tax. So that's what the tax shifting is. That's what the tax shifting is. So we have some theories which we have it in the tax shifting. Yes, so you can so we can define and say tax shifting is a process of transferring tax from low earners to the high income earners, or to the high income earners. So we transfer the burden of tax from the low earners income to the high earners income, And then we have the factors that influence this tax shifting, or what make this tax shifting, so that we change the burden of tax from the low earners to the high income earners. So we write the factors that influence tax shifting. Factors that influence the tax shifting. So the first one is elasticity. These terms you did economy kama unafanya sahi.
Elasticity.
Yes, of demand. Number two, is opposite of a supply also. And then number 3, we have the nature of the market. The nature of the market. And then another one is the rates of tax. Rate of taxes. And then also the government policy. Government policies on pricing. Government policy on pricing. Government policy on pricing. So it depends, like the supply. So you find that like the law firm. So you find that the supply and demand of the law firm is very high. That's why the government, they introduced a tax called the provisional fee, or 5%, or 5%, or 5%. So they will not introduce 5% on a person who is doing a cleaning service, because a cleaning service, it is not in high demand compared to a law firm or accounting firm.
Yeah.
So that's why unapata hizo factors ndio wana shift hizo taxes to the high level earners. And then now we need to know the principles of an optimal tax system. Principles on our optimal tax systems, or the principles of taxation. Basically, it is just the principles of taxation. The principles of taxation. I think before we go a break, we will finish these of principles of taxation. Umeshaandika hizi zote?
Yes.
Okay, good. So you write the principles of taxation. Principles of taxation. Principles of taxation. The first principle, we have what is called the canon of equity. The canon of equity. So the first one, number 1, is canon of equity. The canon of equity. So this one is that the tax should be paid based on the ability to pay. So these are principle that says taxes should be the taxes should be paid based on the ability and not necessary in the equal amount, and not necessary in equal amount. That's why an employed person will not pay the direct tax like pay, because he or she doesn't have the capacity to pay that tax. They doesn't have the capacity to pay that tax. So you only pay when you have the ability, but not necessary you pay the equal amount. And then number 2 is the canon of equity, the canon of economic. Canon of economy. Canon of economy. Canon of economy. You explain that and say revenue collected from taxes should be more than the cost incurred. Say revenue collected from the taxes should be more than the cost The cost incurred. The cost incurred. That's why we have the budget. The government has to read and prepare the budget in every financial year. In every financial year. But that is not the case in Kenya. You find that some of the projects have been allocated the money through the budget, but they end up not completing that project. And in the next financial year also, they will start fund the pending bills. That's why it is very difficult for the government to fund the pending bills. So if you supply goods to the government and your dues upate zimewekwa kwa pending bills, then it will be very difficult for you to get the payment. You will get it, but in an hard way. Yes. So we have another one called the canon of certainty. The canon of certainty. The canon of certainty. You explain that and say, a good tax system should ensure there is a certainty. A good tax system. A good tax system should ensure there is a certainty. There is a certainty, since uncertainties bring confusion. Since uncertainty brings confusion. Since uncertainty brings confusion. That's why you normally know that the rate of VAT is 16%. You have to know that in advance. It should not be changing that this month is 16%, tomorrow is 5%, yesterday is 6%. So we should have a system which is a consistent. Also, we have the canon of simplicity. We need at least 5 points. Number 4. Is the canon of simplicity. Canon of simplicity. Canon of simplicity, and you say the tax system should be simple. The tax system should be simple. That taxpayer should be able to understand. That taxpayer should be able to understand and compute it. So we should be able to know how to compute the pay, how to compute the corporate tax, how to compute the custom duty, and also the system which you are using, either iTax, either eTIMS, either the custom, or what we call CM. What this one for custom, we call it what? CMS or CMA. There's a system for custom. Yes. Yes, for the custom.
Is it ICMS?
Yes, CSMS, or that one. So all those systems should be simple, and also it should be very or the taxpayer should be able to know how to use it and how to compute for their taxes. So let's have a break of 5 minutes. Utajoin again. Tuendelee.
Okay.